G'day guys, my name is Sam from Trade to Prosper to give you another crypto review. We've been doing this for some time with Optimism, and it's one of those long-term projects that I'm interested in. So therefore, those who've been interested should be interested in this assessment as well. Give you some ideas and take it from there. So, in order to give a bit of a context, it's good to look at the past of price action, and therefore you get into the rhythm of understanding what price is doing, get a feel for it. So what I did was I thought I'd better do this separate, different approach. Maybe it's educational for you guys, but it's also is a coincidence. So what I've done here is pretty much previous price action. You see this bottom trend line, some level of support, and price just does what it does. We have a wave 5 count. We actually call this out. I still hold that level of coins, a fair bit of them, and we trade across it and still accumulating. So we did a wave 5, and if that's the wave 5 top, and this is the bottom, you put a 0 and you put a 1, and then you do Fibonacci, okay? And then when we look across, interesting enough, it's a top. And we also had this level of trend line. So we want to see how this plays off. So as we look at this level, 1.618, and Fibonacci works perfectly. So this chart is pretty much price. The price is based on mostly Fibonacci, maybe some moving averages and so on, but and some formations as well. But initially, you can see it's all Fibonacci, right? So as we go across, then we have this macro structure. And let's just clean this up. Just want to give you the context why this was the top and why this is a bit of a reversal or selling off structure. So when we have a Wyckoff selling off structure, then we can, and what I've done here is identified the important neckline. Okay, so we've dropped this level. That was the most important neckline, and we dropped a fair bit. Now, Bitcoin done that, and a whole bunch of other coins did that, where they're topping off structure. So this was an off season for Optimism, and now we've pulled back. Now, the question is, how much is going to pull back? And that's a fair bit of a pullback from the neckline. So if we were to do that, 27%. And then also, if you look at this early wave count, you can say that's a wave 5, and this is some complex structure, and then pullback ABC. Now we're going to look at that, use Fibonacci, and get an idea of what's going on. Right. So what do we do? I found that if we extend this bottom line, extend it to the right, you can see how that comes into effect very much on the trend line. And if I was to do this as well, extend it to the right, it's got that as well. So here we have previous support. So price comes up, bounces. This is a macro Fibonacci. A macro Wyckoff structure, and this level is the absolute most important. So if we drop this now, also if we drop this trend line, then we're going to pull back deep. This could still be a reaccumulation structure if the market is bullish. I'm not going to be hopeful. I'm just giving you the ideas. So we had that structure, and we pretty much dropped it. So that was definitely a significant structure, triangle of some sort, and pulling back. Now, can we say that the target of this is this height? Maybe. So if we were to do that, that could be the target down there. All right. But this trend line is also problematic to think that it's going to go down. So I'm just going to leave that there, because that is a measured move from there to there. So if we do that, yep, that is a measured move. And what we can also do is do a Fibonacci on this. So our main Fibonacci on this is from the top to the bottom and to there or there. Actually, that will be more interesting. And then see how far has it gone down or what the extension is. So we have one here, if we do that, let's do that. It's actually hit our fib 1. So we did that from there to there to there. It's a fib 1. So that is it's coincidental that it hits a trend line as well as a key Fibonacci level. This was to go long. If we break this trend line or some sort, yeah, to go along. At the moment, it's not there. So we're looking at this macro structure. And also, we can also say that if we do this, hold on, give a sec. You can also say that this is fundamentally, if you do that, along those lines, a rising wedge of some sort. So we've got our one cycle. It's problematic. And so it can be a rising wedge scenario and a breakdown. There might be still another bounce if this is a rising wedge before it goes down. But if this was to break this level, this trend line, this level, then we look at this Fibonacci level there. Now let's see if this has any confluence with Fibonacci. So we get a swing high, and we come down to this one here. It is a 0.786 maybe. And then if we look at the third one down, let's just put this in there. It's 0.5. So that could be a major target as well. That's assuming if we break this level, if this doesn't hold and we break further down, so we had a bounce. Can you go long? It's a risk that you take. It could potentially play something like this because we had it there before. Look at that. A bit of a refusal to this trend line did the job. So you can see how it did, and then look how much it went up. Refused to go down. So if it refuses to go down, and how long did that take? Just a sec. Date. We were there for okay, 2 weeks. So if we were to just make that bigger, 16 days, we were there for 2 weeks. Here, that was a nice reversal. Whoops, that didn't quite work. Okay, 9 days. So it'll be interesting to see how this formation takes place. I'll be looking to potentially buy another. This could be something like this structure. When can you go bullish? You can play it safe. This level is what I'm interested in. That will tell me if it breaks that level, we are likely to go continue. And what kind of run would it do? No idea, but that is, we're looking for Wyckoff accumulation at the moment, and that's a selling climax, automatic relay, up thrust, rejection. So it could roughly just come down, and then that's what we're looking for. Another response if this was to drop. Now we can look at that from a number of ways using just getting close. And to see our indicators, probably got too many there. Yeah, okay. I'll put a template. So the MACD is bearish divergence. This is our 4-hourly chart. And okay, let's do this. So let's put on the daily. Still bearish, not up for us. This is looking to battle. If this continues up, that's good. We've got a crossover on the wave trend, and this is above this level, so it's bullish at the moment. And in the past, we've seen something like this. So if we get that, if we get a crossover and then upwards, so if this was a pullback, we're looking for that kind of movement with that indicator. Obviously, the RSI, we want to see on the daily. That will be interesting. Let's have a look at that. No, I didn't want to do that. I actually want to maximize it. Okay, so the RSI is not going to really, the formation is not really helpful. However, you can say that from on the daily, the RSI, this level is going to be important. I think it lines up with that thought what we had similar to this. Like if you look at that, it breaks above that, it goes up. So we have this line in the sand, and so it's really dropped to the bottom on the daily. So it's sold oversold conditions, and we're looking for bullish divergence to continue. So there we have it there. Let's have a look at that. Let's just get rid of the other indicators. So what we have on the daily, let's have a look at daily candles. Daily candles is ranging. Look at that. More sideways than anything else. We've seen in the past on the daily a few weeks, and the fact that we broke above it, found the resistance, and now really retesting this, and we might get retested a few times before we can go up. So that trend line, if it goes up and closes up, it's going to represent that in some way. They might have this one here instead. That level there, previous resistance. So we want to see this continue up to be comfortable. But from this perspective, I do want to see get above that level. And what we can do, go back to the, let's say 80 hour, let's have see if there's anything there. So on the 80 hour, we've got our top and bottom range. So the bottom range is holding good, but you can see that this is the main one there. So let's have a look. If this is our 618 level, it does fit 618. Let's just do this so you can see a bit better. A bit too big, is it? You can see the trend lines. So this is our, there's a lot of wicks on the bottom with upward pressure, and it can potentially, it's probably a good position to enter if it was to drop here. You can buy some up. If this was to drop, it's likely to continue on, even if it's a little bit there. Bit of swing failure patterns there. That's giving us a good idea on what's taking place. There's a lot of buyer pressure. So if we get the daily close above this, you can see the next level of resistance. But I think it'll take off. So that's our next resistance with this Fibonacci 6.8. If you want to play it safe, you want to see the daily close above this. But as I said, you can take your chances with this by the wicks. Keep buying the bottom, and that might be enough for a reversal pattern. So it's a swing failure pattern, but not complete yet. So, and that trend line is making a difference. If we drop this level, then we are likely to come to this Fibonacci. Yep. If it would come, then it's a good buy, and that completes the Wyckoff. So that's our selling climax. Looking for a secondary test, that could be it there. Yep. And even that's acceptable. So, but you want to look at the small time frame, how do you enter that one? So let's look at the small time frame. Nothing clear there. But what I'm pretty much looking at is this area for a good trade. You can probably play it safe if you want to, and that is once you close above that on the 4 hour, that's probably likely to be, 4 hour, that we did not have a 4 hour candle close above. And if it does, we'll probably then range here for a bit and then go up, because this is also congestion as well. So we might get another range here. So that was a fake out, back down, finding support. This level is a good buy as well. So at the moment it's in the middle. There's nothing we can do there. It's a worse position to make any trades. We want either more on the top or the bottom, shorting at the top or buying at the bottom. And that's pretty much it. If we look at our other indicators, nothing special there. But at the moment, macro-wise, it's looking good. finding an entry is based on this. Is so if you understand the big picture, we are likely to continue up if Bitcoin is bullish as well, which I did state yesterday that I am looking for more highs, but we also have a strong resistance. So in that strong Bitcoin resistance, will it give the alts a time to start moving up? Maybe. So I'm looking at that. If Bitcoin drops significantly, then this is likely to drop, and then we play this out and we'll look for the bottom, and that will be the zero point 0.5 and potentially the 0.618 as the worst case scenario. But at the moment, I am looking for this as accumulation for the upside. Risky move to start buying a lot. I would just look for the trades, and then when there's something much more clearer, then like the close above at the key level, then I will go along and just average in more. And that's all I got for now. So hopefully that gives you some idea um, how to be bullish, how to approach this. Just trade it with the small swing trades, and maybe average in and look for your stop losses. Stop losses will be under that wick for sure, um, or under this trend line more so. If we lose that level, we are likely to visit this level, and if we don't get a strong movement there, then it's likely to continue on, and this is where I'll be looking to buy something comfortable. But it's all dependent on Bitcoin, isn't it? Bitcoin is looking for a pullback at a key resistance, and therefore we might just be sideways for a while. I'm going to leave it at that, guys. Hopefully that gives you some idea on how to approach this market, and please give me a like and share, subscribe to our YouTube channel. Talk to you soon. Cheers.